Okay, so yeah, I mean this has been quite a phenomenon nowadays. Some houses because I serve buyers as well, right? Some houses you don't even have the chance to view, especially with the cooling not cooling measures, with the measures, right? Previously it was at 2 packs, now it's at 5 packs. Some you haven't even get the chance to view already, option out already. So hopefully next year, if they start to relax the measures, at least you get to view those units lah. Yeah. Maybe for those of you who have joined us, right, would you like to share what are some of the units that you have been, wanting to take a look at, wanting to buy, but have no chance of viewing, have put in offers, but somehow right, they just cannot get it. So for everybody's benefit, so we can see what are really the pockets, the types of property with really strong demand. So 2021 recap in just one slide, yeah, short and sweet, right? We've seen sharp price increments basically across all sectors, our private residential, our HDB market. This has driven inventory very low, right? Both in the resale market and in the new launch market. So with inventory at historical lows, prices inevitably has been pushed up. Right, owners have been adjusting their price expectations. Buyers have trouble even viewing the particular property. Hi kid, Merry Christmas to you as well. Yeah, so I mean all of this again somewhat unexpected. If we take a look at 2020, but in 2021, it's basically been the same story. Carried on from 2020 and just getting more and more prevalent as we go through the months, right? Which accumulated with the cooling measures, right? They came about last month. No, not last month. Still this month. Yeah, we still have 3 more days to next month. So still this month, December, earlier this month. Yeah. And so with rising prices, there's that phenomenon of the high COV. COV short for cash over valuation. So why in this market is COV so prevalent is because owners have a certain expectation of the price, and in the seller's market the owners always want to sell higher than the previous owner. And also because of the fact that the inventory levels are so low, a lot of the owners are also adopting the mindset that if I cannot hit this price, I can't buy the other thing, because for them they have to sell at a certain price to buy high, right? Everybody have that concern, if I sell high, I buy high. And that's all going to be like a trickle down effect, because we have started off at a stage whereby transactions are moving around valuation prices, and as the market swings into a seller's market, that's where valuations are always lagged, but expectations are always forward priced. So owners are pricing their properties 2 to 3 years down. The prices are 2 to 3 years down the road. They are pricing their property based on what are the new launches fetching at. They are pricing their units at what are some of the potential, what are some of the land bid prices that were done at. And all of that add in with the fact that there's the flood of buyers being forced into a very narrow inventory, right? They have not that many to choose from because of the delay in construction and so on. So all these have basically created a perfect storm, if you ask me, where all the factors really just combine, right, to push up prices significantly, which brings me to the last point on cooling measures. For those of you who follow us, you would know that in the past 2 months, right, I've been predicting that I don't expect the cooling measures to come in so soon, primarily because the supply side issues aren't being resolved yet, and if the cooling measures come in and penalize the developers too much, right, I'm afraid that the government is simply going to make the price increment and the inevitable price shoot up, right, all the more serious moving forward, which, that concern of mine has been realized because the cooling measures have indeed came earlier than we all expected it to come. How is that all going to play out? I'm going to touch on that later on, right? As I talk about the cooling measures in greater detail, right? Let's move forward. And maybe let's have some fun and let's have some interaction. Let me know in your comments, right? What are some of the how would you recap the 2021 property market? In probably a word, 2 words, a sentence, right? How would you recap the 2021 property market? And so we did this same video 1 year back to predict what's going to happen in 2021. And like all good analysts, right? We got a what? Wing Kyong says what? That's probably the single best word to recap the whole market. Well, it also kind of depends on who you are lah. Are you already in the market, or if you're not in the market? If you're not yet in the market, what probably not that good of a word. But if you're already in the market, what is probably the best word. So, like all good analysts, right? You want to make sure that your predictions are, pretty. You want to take stock of what your predictions are. So if our predictions very not soon, right, then maybe next year nobody want to watch us anymore. So we got to come and take a look at how our predictions went. Yes, Kid, 3,000 PSF we go. 3,000 PSF for where? For Park Esta, is it? 3,000 PSF for Park Esta, Kid. Okay, so let's review our predictions and see how our predictions went. Yeah. So last year we predicted interest rates to remain low, which was correct. Yeah. We're only going to see interest rates come up in the year 2022. And that low interest rate has really helped push the market up. We predicted lesser launches, actually the one we already know, right? Because the bulk of the launches, the bulk of the supply that came on due to the 2018 en bloc rush, the 2017, 2018 en bloc rush, that kind of stopped after the 2018 cooling measures. So after 2018, the en bloc has slowed down significantly. The land sales have slowed down quite a bit as well because even though the land sale numbers, if you're looking at how many land sales that were actually transacted, were not that low, but the project sizes were a lot smaller. Add together with the fact that a lot of them are then subjected to the new minimum average unit size that have really squeezed the demand significantly in certain directions. Yeah, lesser choices, right, because of the drop in inventory. That panned out as well. And of course, the last part, right, with resale demand picking up because of the fact that the new launch inventories are going to dry up very, very quickly and forcing people then to go into the resale market. And we have seen resale prices picking up significantly, right? So much so that the government had to step in preemptively to put in the cooling measures. So I think on these 4 points, right, pretty good. Some people say self-praise is no praise, but I thought I did pretty okay. So gonna give myself a pat on the back for that. We also predicted that the cooling measures will come. So late last year, I thought the cooling measures would come, but because of the fact that as we drag on, right, in the first half of the year and seeing that supply side issues still unresolved, supply chain issues, increased manpower, those things still unresolved, and that sort of gave me the how do I say that, made me feel that the cooling measures weren't going to come around so quickly, because I thought the government would allow those issues to be resolved first before coming in. But not to say the government was wrong to do so, right? We all accepted, right, that the new round of cooling measures coming was probably the worst kept secret in the Singapore property market. We all knew the cooling measure, that would be one round of cooling measures coming. The only question mark was as to when exactly would the cooling measures come lah. So on that note, right, pretty spot on as well that, you know, the cooling measures would have come. Not so precise in terms of exactly when, but still, yeah, we all knew the cooling measures was going to come. And then what were some of the opportunities that we pointed out to you? Some things to look out for in the 2021, the market in 2021. We pointed out landed properties, and we also pointed out the large units in remaining new launches. And so let's take a look at how that and how those opportunities pan out. Yeah, with looking at actual data. So, landed properties, let's take a look at how they performed compared to the other market segments. So I took the data from, you know, 2019, 2020, 2021. I think we can zoom in a little bit for all of you to to be able to see it better. Zoom. Let me try. Never mind. Yeah, not very familiar with Mac, you know, but I tried to use PC, but it kept lagging. So I hope you guys can see. So on the left column, right, it is the combined prices, both landed and non-landed. From 2019 to 2020, it dipped by 5.9%, but from 2020 to 2021, right? So for this year, and I took Q3 because Q4 data is not quite not out yet, up by 15%, right? So net about 9.1%. But if we take a look at landed, so landed outperformed all the market segments in 2020. And also in 2021 continued that trajectory. So over the last 2 years, up 13.9% total. Yeah, but you compare that to non-landed, over the last 2 years only came out about 6.7%. So landed in that market segment, if we look at increase in property price index, have outperformed the other market segments. So for those of you who are out into the market looking for a landed property now, very, very difficult. Price points, right? Previously, actually just maybe 1.5 years back, 2 years back, you could find a probably original condition semi-D for maybe 3.5 million in Kembangan area, District 14, District 15. But in this market, some I believe even at 3.5 million, you want to find something at District 15, you'll be looking at a very original condition, inter-terrace. So that drops you down from semi-D all the way to inter-terrace. You jump across the in-between, which is a corner terrace, all of that within just a single year. So not just, you know, so that's how we make sense of actual movements in prices, because, you know, we see percentages, sometimes you cannot reconcile them, right? So I wanted to share with you some of the observations I see on the ground in the market. So landed prices have came up significantly over the last 2 years. And so, you know, for those of you who bought something last year, or as a matter of fact, bought a landed property earlier this year, you are probably already sitting on massive profits, right? Because of the fact that landed property have little to no new supply coming in, right? Little supply, right? We have some supply in the sense them coming up, like projects like Belgravia Ace, we have like over at Seletar with Neem Collection, like the different batches of Luxus Hill. But other than those, we don't usually see new supply of landed properties coming up, because they are all sort of a legacy that has been passed down from many years ago. The government don't usually release new landed property sites for sale. So it's some a market segment with very high demand but very little to no supply. The reason why we pointed out, if for those of you who maybe have not seen that prediction one, right, and since we are on that, right, we are going to put that link in the, for those of you who's going to watch the replay, right, we're going to put that link of our predictions video up, right, probably somewhere over here. Go and watch it, then you can understand why we make those predictions. We didn't just pluck it out thin air, but to summarize it for you guys, because we saw that the large units in the new launch developments were pushing very, very close to the landed property prices, right? 5 bedders, 99 years, hitting 2.5 million, 2.6 million. At that point in time, late last year, landed properties, inter-terrace, maybe 3 million, 2.8, 3 million, 3.5 million. That gap is very, very narrow, so which is why we see demand actually flowing very quickly over to landed properties the minute people start to realize the trends in the 99-year new launch condominiums. Together with the macro the macro trend changes, such as a preference for larger space, the proliferation of more multi-generation living as part of the things that have changed over the couple of years due to the situation that we are in. I can't say that word again because if not they were going to block my video. So demand for large units, this is something that perhaps is maybe not so obvious to the market, especially if you're not like either an agent or not somebody that's actively looking for a unit of this type in the market. So I put out 3 developments, High Park Residences, 1,000 over units, DNES, High Park Residences, our favorite case study over in Fernvale. We have DNES and Coco Palms in Pasir Ris. Both developments are bigger than 1,000 units. The 4 and 5 bedroom units, right, if you tally all of them up, it's about 21 units available only. And one of the units at DNES has been sold by us just last month. The demand, honestly, right, coming from someone that is active on the ground, it's, for lack of a better word, it's nuts. Yeah. So just a couple of years back, we were trying to list that particular unit as well. We were struggling to get any offers in at 1.6 M. Fast forward 1 year, sold it with multiple offers and at 80K above the last transacted price, right? Setting a record price in DNES. So for the owners of large units in the OCR, my recommendation, my suggestion, hang tight. We're going to see this trend getting more and more favorable to you guys moving forward. For those of you who are looking to buy into this kind of large 4 bedrooms, 5 bedrooms units, buyers of these developments, I would recommend you act quickly, right? Take a look at some of the MOP units that's going to come up within the next year, right? We have quite a number of them. I'm going to share that with you later on in this presentation. But I would recommend taking action if these are the type of units you are looking at to buy, taking action sooner rather than later. Yeah, because prices are really moving very quickly because landed prices have shot up significantly. Now everybody is forced back into this this segment at this kind of price points, and eventually this is also going to go up. And you may end up having to either go to something that's very old, or have to if you can't stretch your budget that much, right? Either go to something that's very old or compromise on your size to buy perhaps a 3-bedder . So you notice that domino effect, right, of prices moving up, right, based on the size, right? The larger the size, they lead the price first and then have a knock-on effect moving down. Hello, sorry to interrupt. We'd like to take the opportunity to thank you for watching the video and also to share why we do what we do. Is to empower consumers with hard facts and figures, quality research and real-life examples to allow them to make the most informed property decisions. So if you found our videos useful, the only thing we ask for is for you to smash that like and subscribe button so that the YouTube algorithm can push out our videos to more consumers. Thank you, and back to the video. So what are some of the major events that happened this year? Of course, right, the cooling measures, right, the big obvious one. We've done a video on that, let's talk about that in detail. Released it, I believe it was last week. So for those of you who have not watched it yet, right, you can go over to watch it I explained the recent round of cooling measures using 3 everyday items, right? A cane, a can, and a spring. So just a very, very quick summary of what I mean by that, right? The government, the analogy of the cane, the government is using the cane to warn us, right, not to buy up the prices too much, yeah? Because at the last time around, the government allowed the prices to shoot up before instituting the cooling measures. This time around, they don't want to wait for that to happen and then come back in and punish the market, because you know that's going to create periods of uncertainty in the market. So for now, they decide to use the cane first rather than, so they're taking the cane in to warn you first before caning you after you did something naughty lah. The analogy of the can, they are kicking the can down the road because they hope that, you know, with time, the supply chain issues will resolve themselves, number one. Number two, interest rates coming up will naturally dampen the market on its own. Yeah, so kicking the can down the road so they don't have to do something overly drastic, such as instituting capital gains tax, for example, such as lowering LTV. This sort of cooling measures will take away demand from the market. If you notice, this round of cooling measures basically is adjustments and tweaking and increasing existing cooling measures, which do not remove demand from the market. They just pause and hold back demand temporarily. So it's a matter of time before the people get over the fact of these cooling measures. They learn how to circumvent it, and then the prices will just continue to move again. Then the government need to think of something again, right? So hopefully the increase in interest rates will hold back prices slightly lah. And then the analogy of the spring, yeah. So the spring is the analogy for the potential for property price to increase. So the more the spring is compressed, right, the higher chance property price will shoot up very, very quickly over a short period of time. Basically something that like what happened in 2017, 2018, and something that the government is trying very, very hard to avoid. So what are some of the things that's pressing down the spring, right? We have low interest rates pressing down on the spring. We have supply chain issues pressing down on the spring. We have high number of record number of HDB MOPs pushing down on the spring, increased wealth. So all these many factors really just squeezing that spring down so much, right? That, you know, if the government don't step in to sort of use this cooling measure to release that pressure on the spring a little bit, it's going to result in a sharp shoot up in prices in a very short period of time lah. So cooling measure is to release a little bit of pressure on it, right? Then, like I said earlier, with interest rates, right, naturally the spring pressure will release it a bit more gently over a prolonged period of time. Okay, but if you want to understand that in greater detail, go and watch the video. It is the very next video. If you go into our YouTube channel, it's the very first video before this, yeah. So if you really go and understand the cooling measures, the two main groups that the government is trying to target at, for me personally, it's the foreigners and also the developers. Okay. Let's take a look at this. Okay, so and you know, I'm going to add on a little bit more on top of what I shared in that video over here. So if you take a look at the prices, right, over in 2017 up to 2018, prices came up 8.7%. Then the cooling measures came in. Yeah, so today was 8.3%. Then the cooling measures come in. So, moral of the story, right? The government trying to keep things under 9%. Lah. So the next time around, right, all we need to do is track this number. If it nudges close to 9%, we more or less know when the cooling measures are going to come in. Yeah. So, but then some of you may say, "Hey, Alvin, I thought you say this time around they're trying to be preemptive rather than reactive." But it already came out 8.3%. Then they come out with the cooling measure. So how can you say it's being preemptive? If they are really preemptive, right, they would have done so maybe at the start of 2021 already. So it's then important to understand the key difference in the market, where the market stands, right, in 2018 and in 2021 and 2020. Right, 2020 and 2021. In 2018, that price increment was on the back of a surge and a significant increase in supply in the market, right? Because that was on the back of high land sales and high en bloc, right? But if you look at today, right, there's record low inventory on the back of price increment. So there's a difference in terms of the supply in the market between 2018 and 2020. And if you watch some of my previous videos, I sort of explained how I see this as being something that is a lot more sustainable and a lot more organic than what was happening in 2018, because the increment in prices like that wasn't really driven by the new launch prices versus 2018, which was primarily driven by new launch, new price, new benchmark prices. This time around, the price increment was really more demand-driven price increments. Yeah, people snapping up properties, and you know, it resulted in the resale prices. If you really look at it, resale prices narrowing its gap with the new launch. That's also another thing if you really want to sort of understand the difference in the market between 2018 and today. Right? In 2018, the new launch and resale price gap was very, very big. Right? So now that you understand this, you hopefully, right, we all have a better picture of why the government is doing this, hence that 3 items analogy, right? But to summarize it, to make it easy for you to understand, they are not trying to destroy demand, right? They are just trying to halt demand in hopes that some of the external factors will hold the property market back organically, naturally, yeah? And so, right, the 2 groups that will be affected, right, foreigners and developers. So what I did some research, right, and so in this particular chart, it charts the price movements of favorable cities in the world that developers would like to, or high net worth individuals would like to buy. So we have Japan, we have Seoul, we have Hong Kong, Singapore, US, Australia, UK, Taiwan, right? Basically people's favorite destinations to go and buy property. And if you notice, right, actually the Singapore property, if we take baseline being 100 in Q4 2019, it's only come up to 106.9, right? 6.9% in the last 2 years. Compare that with SK is South Korea, right? 140%, the US increase in 40% increase, right? The US 27% increase, Australia, 16% increase, UK despite Brexit, right? 14.9% increase. So I mean, these guys, they are educated people. I mean, they have to be, right? They are smart people. If not, they wouldn't be so rich. They will be looking at these prices and be telling themselves, say, hey, despite this extra 10% tax that I have to pay, does Singapore still represent good value for money in that sense, because it hasn't exactly gone up as much as the other gateway cities in the world. Yeah, not just this slide, right? In my next slide, this tracks all the way back to 2011, and the reason why I put this slide inside here is to help you understand that the Singapore property market has been suppressed, right, artificially, if that's the right word for it, right, because of the government cooling measures that came in from 2011 to 2013. And because of that, right, if you compare Singapore's price movements with probably the same number of cities, right, with a little bit more, right, Hong Kong, New Zealand, China, even Malaysia, Australia, almost like never move if you want to compare with the other cities. So, if you were an investor and you look at this, right, you may feel the Singapore market still offers good value for money, right? It hasn't really increased that much as yet. So the extra 10%, maybe it's still worth it, because even if I factor in that 10% and compare the prices, it may still represent good value for money in that sense. So based on this comparison, it's also understanding who we are up against, right? So we're also looking at what are some of the taxation, because yes, they come into Singapore, right? For us, if we look in that microscope, right, of just being with tunnel vision, just looking at Singapore, you may be thinking, wow, extra 30%, so much more. Will people actually pay that number? But if you take a step back, right, these guys, they are comparing cities between the different cities. Okay, so they're also analyzing not just the upfront cost, they also analyze, right, what's the cost of holding on to these properties. So yes, right, a lot of the countries don't really have such high ABSD penalties for foreigners, but they have very high taxation if you do sell it, right? For example, I take just one example in the UK, 28% on your sale price. You then have 40% inheritance tax. A lot of these guys, they are buying all these properties for legacy planning, hedging against potential geopolitical risk. So over in the UK, income tax 20%, 40%, 45%, depending on which tier are you at, right? But in Singapore, we cap it out at 22%. So there's a lot of other taxes involved for all those extra cities, and with all these things weighing them down, their prices have still shot up so much. But versus Singapore, right? Yes, the initial transaction cost may be a little bit higher, but they will be just comparing across the board based on net, how much are they buying, what is the net price are they buying at. So per square feet wise, Singapore, if you even compare it to Shanghai, it's still significantly cheaper. You want to compare to New York, it's still significantly cheaper, even with the increase in ABSD. And Singapore are not, Singapore is one of the few countries in the world not subjected to capital gains tax. Yet, I hope I'm not jinxing this, but if the capital gains tax really do come, that will really erase and suck away demand. And so that's perhaps the single scariest potential cooling measure that may come in. But if next year we see prices shooting up like 10, 15, 20%, I think we all have to brace ourselves for some capital gains tax to come in. But as of now, I still don't think so. Hopefully this round of cooling measures will help prevent us from getting to that stage. Okay? So all in all, right, I think the high net worth, they're still going to come in to Singapore even with the increase in the 10% additional buyer stamp duty. And so we're still going to expect the ultra luxury level properties to still be transacting even with this 10% increase. Okay? So then, right, with what has happened in 2021, and then with the cooling measures, right, how do we then gain some clarity as to what to expect in the market in the next 1 or 2 years? Yeah, so we want to take a look at what are some of the things that will not change even with the cooling measures, right? The low inventory is still not going to change in the next 1 to 2 years, because even if the government were to increase the supply, the developers come in and start to en bloc. All those supply is not going to be available, with just by snapping your fingers, right? They're going to take time to build, right? Yes. So later on, I'm going to share with you some of the news that the government has released after the cooling measures with the increase in supply. But those supply will only be available for people to actually move in and stay 4, 5, 6 years down the road. Yeah, so we're still going to face a issue of low inventory in the next 1 to 2 years. Okay, the increased wealth, as with the population census, I'm going to touch on that a little bit later on. That's not going to change. A high number of HDB MOPs, similarly, that's not going to change because those people are already in their HDBs and they're going to hit their MOP soon. So that's also not going to change, right? And benchmark prices being set from the 2021 land sales, right? So I'm going to take you through some of these points, right? So if you look at it, so right after the cooling measures were announced, the very next day the government also came out to say, I'm going to increase supply. So as you can see, cooling measures a lot of the times is trying to control demand side. So on the supply side, they are also hoping to increase the supply so as to use these both economic triggers, I don't know, triggers, knobs, whatever you want to call it, right, to control the prices. Okay. So, but then you got to go and look at, how much supply is actually going to come online. So, for those of you who just go and look at it like that, right, and you see them saying things like 40% increase, you're going to have 35% increase, you'll be thinking, wow, that's a significant increase, huh? And then the next thing that's going to come inside your head is going to be, wow, supply increased so much, demand dropping, supply coming up, demand dropping. That's going to cause prices to come down, right? But so that's why I'm here, right? I want to share with you guys in detail how do you really understand all these figures. So if you take a look at this table, right, credits to Orange Tea for putting together a pretty good table over here to allow us to see the trends. Again, right, notice how as a matter of fact, after the 2018 cooling measures, the GRS numbers were very, very low, even before, right, all these things that's happening. Yeah, right now it was already very low because the government was knowing the fact that the last round of cooling measures that came on is going to suck out or to halt the demand from both the developers and also from the buyers. They didn't really release a lot of land, and then they were supposed to probably halt that. What I feel, halt that for maybe a couple of quarters and then start to push out supply again, probably in late 2020 and 2021. But because of what has happened, they couldn't do that, and so it's being pushed all the way back to first half 2022. So notice how if we've gone 1, 2, 3, 4, 5, 6, basically 6 quarters of lower than normal government land sales. This is going to result in a period in time which is, for those of you who follow us, right, remember the 2025, 2026 potential period of under supply of TOP units. That is still going to happen. You release, right, 2,700 units nowadays. Is that really a lot? If you go and compare to 1718, it's also not that much. Yeah, provided and you have to go and continue supplying 2007, 2008 units for 1, 2, 3, 4, about 4 quarters to really start to make up for the lag in GLS over the last couple of quarters. Yeah. So conclusion, right? This increase is not going to cause an oversupply in the market, right? For those of you who have that concern, if they go on maybe 6 quarters of 2,800 units, maybe there will be an oversupply. But the government will not do something like that, right? Because they don't want to have an oversupply in the market. That's the whole reason why they did the cooling measures back in 2018. So they are being pretty clever about it, right? If you really see it, how I see it, they institute the cooling measures first. And who is one of the parties that's going to be affected by this round of cooling measures? The developers. They bring the cane out, warn you first. Then they supply the land out. So they're saying, I'm going to, you better watch it. Okay, here, you want to buy or don't want to buy. You better bid it with bearing in mind the new cooling measures that have, that we have instituted. Yeah. On that note, right, they were pretty smart about it, because if they don't do that cooling measure, they launch the supply out like that, the developers are going to beat the hell out of those prices. Yeah. Right. The next one that I want to take a look at, right, BTO units are also going to be released, and on this one, the increase really will be significant. Yeah, we average about 17,000, 15,000. They're pushing it up to 23,000 over the next 2 years. This is a significant increase. Yeah, don't get me wrong. This one is significant. The private one, not so. This one is significant, and that's bad news for HDB owners, buyers. Just generally bad news for the HDB market. Because again, I've talked about it, the increase in HDB prices over the last couple of quarters. Was it because there was an oversupply, or no, was that because the supply in the market is really that low? No, right? It's a lot more so because the new batch of BTOs, the government is telling them it has to be so much later, 2026, right, 2027. Artificially forcing demand into the resale market and artificially pushing up prices. All that aside, right? All that aside, if you're going to see supply charts like that with a lack of private supply, so high HDB MOP units, right? Because all these BTOs eventually going to turn into MOP units. These sort of numbers with low private supply is going to push private prices up significantly. Remember that whole spring analogy. These numbers is adding in onto the pressure of the spring. Okay. Right, so what else is not going to change? Right, I wanted to show you this figure. You know, look at on the back of the GLS chart previously. Remember how many quarters? 1, 2, 3, 4, 5, 6. Right, 6 quarters of low number of GLS, followed by essentially 1, 2, 3 years of very low en bloc sales as well. We have just started to see en bloc slowly picking up, right? Again, then the government has come in preemptively to warn the developers not to do that, right? They can't really control the en bloc market, so which is why they had to do the adjustments to the cooling measures lah. So if we don't see, right, and we have already seen this with Shun Tak, right, Pansy Ho, daughter of Stanley Ho, the Macau gambling mogul, the rich man, right, the rich dude that passed away earlier this year, yeah. They have abandoned their en bloc bid, right, forgo the deposit because of the cooling measures, right? So that's gonna, hopefully the government has achieved its objective of warning developers not to be overly aggressive in their en bloc bids lah, yeah. But if you're asking me if that holds back en blocs too much and they're only just releasing that kind of numbers of GLS, right, it's going to cause a significant undersupply in the market, significant undersupply in the private market. Yeah. So what else is not going to change, right? The increase in affluence, right? Increase in wealth in the market. And this is the population census. So if you were to ask me what was the most important thing that came out in 2021, right, it is the Singapore population census, right? So many things that we can take away from it, yeah, with the fact that, you know, the largest group today is formed by people with combined 20K monthly income. If we work our way backwards, yeah, they're going to work out to have a budget of about 3.45 million, right? Use this info, right, and come back to the fact why I keep saying large units in the OCR will do very, very well moving forward, right? We've already seen actual data with the lack of supply in the market today, resale market today, right? If you're to look at new launches, right, the large units are going to do well moving forward as well, based on this very simple fact of increased affluence in the market. Right, we see an increase in the number of millionaires in Singapore, expected to rise 61.9% by 2025. Right, part of the why, right, the census have also shared with us is because more than 50% of married couples today are dual careers. Right, they are getting married and having kids later, allowing them to save up for a lot more money. Right, most of them get married already got property, yeah, allowing them to have higher disposable income. Right, increase preferences for private properties, right, 11.5% to 16% over the last 10 years, and I'm going to expect this percentage to continue to increase moving forward. So all in all, right, it just shows that the demand is from all those HDBs is going to be converted into the private demand moving forward. Yeah, what else is not going to change? The amount of the number of HDBs hitting their MOP is not going to change. Right, so which is actually, if you look at this chart, right, I like to tell people that I feel HDB have, you know, the last 2 years to thank for the prices not really dipping down, because assuming none of all these things are happening in the market right now, right? So anyway, for those of you who just joined, right, pardon me if you feel like I want to say something, I cannot say it, right? It's because if I do say it, YouTube is going to block my video, right? And I wouldn't be able to publicize this video. Like if I say that word, they will block it. So I cannot say that word. But we all know that word, right? The C word or the P word, okay? Without that, yeah, the market would have been flooded by a high number of HDB MOPs. And with that, right, it's only going to cause prices to continue to go, HDB resale prices to continue to go downwards had none of this happened. So I thought HDB caught a break on that part and have all this to thank for prices basically holding steady, or as a matter of fact now rising up beyond anyone's expectations. But the fact is that supply is in the market right now. So once supply chain issues are resolved on the HDB front, I expect HDB prices to correct themselves again. Yeah, and to continue on the trend that we have seen previously. So HDB owners, right, and with that previous slide, right, of the significant increase in supply again in 2022, 2023 is all in all pretty bad news for HDB owners. So please, HDB owners, do take note of this if you have the idea of upgrading. Again, I would recommend doing it sooner rather than later. So what's the supply moving forward, right? What are some of the new supply that the government is putting out? Okay, we have Pine Grove, Dunman Road, Lentor Central, Lentor Hills, and EC over at Bukit Batok West. So while they said, right, we're going to release 2,700 units worth of land in the next half of that is going to be taken up by the Dunman Road site. And that is that one site that I will be paying a lot of attention to because that site already got buyers eyeing that site. So you can imagine the number of developers eyeing that site, right? But with a 1,000 unit site, I expect the price to be pretty high, most likely in excess of $1 billion. So we should be seeing joint ventures from developers going in to bid for this land. And with the kind of strong demand, I don't think the developers will be overly concerned with the new round of cooling measures over here. The Pine Grove site is also another site that I expect very, very strong demand from developers because it's been a while since there has been any launches in that area. The area is also very, very popular with people looking to move there for schools as well, right? So what I would be paying attention to all these land sales moving forward really is the number of developers, not just the price that they are transacted at, right? Because that's going to be high, right? Like it or not, it's going to be high. It's going to set new benchmark prices. But what else will I be looking at? I will be looking at the number of developers bidding for these plots. Yeah, because if you notice in 2018, after the cooling measures, the number of developers bidding for plots dropped, right? So like Penrose, 6-7 bidders, right? If the number is lower than 10, that should tell you that the developers are still trying to figure their way out as to how to make money with this round of cooling measures lah. But all in all, I feel the mass market, the developers catering to the mass market, they will not be so afraid. So if I were to throw a number out there, right, I would still expect to see maybe 12-15 bidders for these plots, maybe for the Dunman site, maybe even in excess of 15 lah. But that said, that number really a little bit hard to gauge because the big name developers may do joint ventures lah, hence dropping the numbers down. But in actual fact, a lot of developers will be very, very keen on that side. Okay, so that's that. All in all, right, if you were to ask me, still not enough, this supply. Right, so what else is not going to change? The land sale prices that have already been locked in by the developers. Right, we have slim barracks in the RCR. The developers will have to sell it at between 2,001 to 2,350 PSF. Right, but what would be interesting to see would be how Lentor and Ang-Mo-Kio Central fare, because these guys are going to be the ones that set the new benchmark prices for OCR PSFs. Right, and if we see strong take-up rates for units with this kind of PSF in the OCR, that's going to lead the continued price increment. Right, that's going to trickle down to the market as a whole. Okay.